Jim Cramer here to answer your Twitter questions on the floor of the New York Stock Exchange. Jim, a lot of talk about China today.
Yes, indeed, and I think that China's part of this trade war against the United States. Japan's been part of it, Europe's been part of it, and we don't really seem to want to acknowledge it. It's because our economy is a little bit stronger, but everybody wants a piece of our business, and I think that everyone wants us to not be able to sell as well as they are, and you'll see all the stocks that are our export stocks to China really getting killed today.
And Jim, one viewer writes, with all these situations of global economies weakening, currency being devalued, what are your best U.S.-centric growth picks? The viewer suggests Jack in the Box, CVS, and Shake Shack, if you have any thoughts on those.
Okay, well, Jack in the Box had a great quarter, but the stock doesn't seem to run, which is mystifying to me. But then Red Robin Gourmet reported a really bad number, flat number that I didn't expect. So their Shake is really the kind of shining star of that. I think that Walgreens is very good. That's right up there with CVS, definitely in terms of like being able to buy something that I think does well in this environment. And then you got to go back to Allergan. Allergan had the best quarter. We like this combination of Heinz and Kraft. That's perfect. General Mills. And then White Wave reported a great quarter. Not unlike Constellation. When Constellation reported, the stock got completely hammered. I kept thinking, well, what's the matter? What's the matter? There was nothing the matter. Next thing you know, the stock's up 10. White Wave really works here.
Jim, the other big story, of course, is Google, a.k.a. Alphabet. Somebody says, is it a buy, sell, or hold at 700?
Okay, the big position for Action Alerts, and we think that it's a buy. Here's why. Because it sells at 21 to 22 times earnings. Now it can go to 28 times earnings. The reason I say this is going to be multiple expansion, this is very much like when Amazon broke out web services, and you realize, geez, Amazon's wildly profitable. There's a wildly profitable part of Google that is not getting any credit and it's growing really madly, like programmatic and YouTube. And then there's all these other moonshots, and if some of them pay off, it will be dramatic. So I think Google is a huge buy even up here.
Jim, one viewer writes, you used this argument with Netflix. What would Twitter be worth if it was a private company? Do you think it's a $19 billion company?
No. I mean, I think the problem with Twitter, and we own a Fraction Alerts, is that it's a smaller company. It's loved by media, it's loved by people who want to use it to promote, but Twitter's not been able to monetize yet, and it's very disorganized, and people don't use Twitter as the news feed. They have to do a lot of work for it. I mean, Twitter is not a big company, and it's got a big market valuation.
And Jim, finally, what about Mondelez? Are you on the same side as Bill Ackman?
Yeah, very much so. Wanted to buy it, but we were going to buy it, say, last week for Action Alerts. We did not get a chance to. I think Mondelez has got a lot of room to be able to cut costs. Now, our favorites now are White Wave. I mentioned that one, and we love the combination of Heinz and Kraft. I also like General Mills in any pullback because General Mills is reinventing its whole product line, and PepsiCo, if we come back to 94, 95, would be terrific.
All right, Jim, thanks. Send your Twitter questions to @Jim Cramer. Use #CramerQ. I'm Rhonda Schaffler for The Street.